May profits be upon you. We're going to take a look at Aussie dollar. Aussie dollar, the Australian dollar against the USD. All right, let's look at the RT money meter, which tracks the rate of change of each individual currency futures, the currency future individually. All right, we track it over a period of 15 weeks, and we update this list in terms of ranking it strong to weak. We update it every week. And last week, USD was ranked at number one at 8.39. This week is ranked at number one again at 7.90. Sideways move, a little weaker, a little pullback on it, but negligible, right? Still the strongest. And if we go down to Aussie dollar, last week it was ranked at number 6 at minus 814. This week it's ranked at it's ranked at number 7, minus 892 is the rate of change. So it is getting a little weaker, kind of a sideways move again, but still pretty good to pair a weak one to pair against the strong US dollar. Weak against the strong against the weak, right? So let's take a look. Let's take a look at the monthly. All right, and what we can see is we have a downtrend, right? And this is the COVID low. And, when price broke this swing low here, right, it didn't break and close below it, right? It came down, swiped the low for liquidity, and then moved bullishly up, but it didn't break that high. This is the swing high, from a monthly perspective, right? We're just going lower low, lower high. This is actually the lower high, I'm sorry. And we'll come back down here and we correct up to this point, and then we break structure here. So this is the lower high, and this becomes the lower low. We pull back, respect that high, break structure. All right. And now we're coming back down again. So for me, because it failed to make a new high. All right, because it failed to make a new high and it's coming down, the low is vulnerable for liquidity. And I believe we're going to take that low. You see how much monthly volume and momentum that we have here. This is going to happen, folks. All right, that's my assessment. Now, let's take a look at the weekly. Okay. We can see each week, a week, everything's moving down. We have plenty of momentum into this candle. And there's a demand zone right here, well formed, that is imbalanced, that we've already tapped into. And we're waiting to see if we're going to get some kind of reaction from here. Doesn't mean it's going to reverse the market. It just means, it's just a reaction. And we may get a pullback. Let's see. Let's go to the daily. Okay. And on the daily, what can we see? We see the break of structure here. All right. That's swing structure on the daily, right? Lower low, lower high, down. This is the lower low, lower high. We break the lower low and we make we got a new bearish leg, right? And strictly from a daily point of view, this for me represents a pullback just by the sheer amount of time it's spent here. So this becomes a pullback high, and then a break to the low, a break for a new low. So we have a lower high, a lower low, and I have a new leg of daily structure there. And that's if we look at this, we can see that we have a large zone that we could outline, right, for supply. There is an extreme in there that is imbalanced, that if price should come back up here, this will be a high probability trade to the downside. Okay, a good sell. All right, but we have this break of daily structure there, and prices mitigated the weekly zone down here. That's the outline. All right, we have the daily extreme of that weekly demand zone down here. Price should hit down here. This may give us a good pullback. All right, and which is going to be a tradable long position, in my opinion. Not a reversal, just a tradable position that we can take to the next opposing zone. This is the area that should be our concern. All right, we did get a sweep here, so that sweep becomes really important down on the 4-hour. Why? Why is it so important? Because again, this is the daily. This is the yeah, actually, it is the daily structure. All right, the daily what do you call it? Leg of structure. All right, from swing high, which is here, swing high to swing low, and we expect some kind of pullback. Is this the pullback? Here is the equilibrium, the 50% of the trading range, and we're shy of it. All right, we did sweep, right, and that again, that sweep of liquidity here becomes important because it forms a zone of supply, and price is below that zone, which is imbalanced. So if price comes here, I believe this zone holds. All right, the zone will hold, and maybe it gets up into this area, the extreme of it. All right, maybe it comes up there, maybe it doesn't. All right, because it still has this fair value gap to fill, and we might get a reaction from there. But this zone, I think, has a good chance of holding. If price drifts back up, corrects this impulsive move, this would be a decent area to look for a short. I don't like it as much. I'm not in love with this short because it's below the 50%. And I like to see price break and close around this area, above it somewhere. All right, now we can find a zone that we can trust. In this one, I definitely trust. I believe that's a high probability area to take a short from. There is supply around here, but I don't see a good sweep. All right, and I'm looking for what did it accomplish? Breaks of structure and all that good stuff. This one here, price is traded into here. This has a chance to hold, so I'm going to mark this one as well. All right, because price, when it came down, swept that high, pushed down again, swept the previous candle high, and then gave a sharp V and comes down. So I'm definitely looking at this area. I'll mark it this way, and I'm definitely looking at that area, and it's in the above the 50%. It's in premium price. This is better priced in the premium prices. It's better situated because it's in balance. It has a sweep of liquidity, and it led to a break of structure. This one's a very good place to look for a short. I will look for this one because it's in premium price. I don't exactly I'm not in love with the construction here because this looks like inducement for this, but there is some inducement in the leg, so price could definitely punch here. But this is the first place I'll look for price to reject. Now, the deal is, I believe price is coming down here. I do. I think this low gets taken because it seems to be weak, even though it did sweep liquidity here. We didn't get a breaking close above it. So, I'm not, confident that this wick demand will hold here. All right. Because it swept, there's a chance that this might be a return to impulse kind of situation. But I think this is a weak, this zone is weak, to be honest with you. So I'm not counting on this pullback. If we get the pullback, that'd be great because I'll be looking for a confirmation set up on the 15-minute. I'll be looking for confirmation that price is turning around here. All right. If we break here first, I'm looking down here, and we might be able to get a nice high probability trade too and TP here. So That's what I'm looking at, folks. I hope you enjoyed this video. Smash the like button if you would. That would help the YouTube algorithm, and also helps the channel to grow. Do leave a comment. You know, I always love the comments. I want to know what pairs you are trading this week, and if this one seems like a sweet setup to you. I'm telling you this: if price does pull back into premium prices, this is a challenge passer. All right. This looks like a challenge passer to me. Okay. This one I would take and hold. Got it? Because it's pro trend, and this is a high probability trade to take from premium prices, and it's going along with the high time frame trend. Just word to the wise. Anyway, I will see you in the next video. Thank you for watching.